Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to talk about how October has ended up being a pretty good month for equities. Plus, because it's the Halloween, the 31st October, some very spooky data coming out of the EU. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Let's get in the spirit of things. Let's start off with the spooky data coming out of the EU today. Because basically we had super red hot inflation reading coming out of the EU today. In fact, EU's version of the Consumer Price Index year on year was announced at 10.7% versus 9.8% expected. This is the highest reading ever for the Eurozone. Highest reading ever. And in fact, some of the countries which make up the Eurozone, obviously, they have very shocking inflation. Italy at 12.8, Germany 11.6, and France is edging higher as well at 7.1%. In fact, like I say, this really is adding to the inflation crisis we have across the globe. In fact, like I say, UK now is not the highest because the EU is beating it. It's higher than that. So this is a really scary reading, very scary reading. Don't forget, the ECB raised interest rates last week by 75 basis points. They were fairly dovish in their press conference afterwards. But this is really going to be a real big problem for the ECB because their GDP came in as well, announced at the same time. It came in at 0.2%. as expected. The previous reading, however, is 0.8%. So you're in a real rock and a hard place, like a number of central banks, but a real rock and a hard place. Because if you've got inflation, which is soaring at 10.7%, and a GDP, which is slowly, really struggling at 0.2%, down from 0.8% previously, then you are about to slip into a recession. And raising interest rates is not going to help. But what are you going to do with that 10.7% inflation reading? So they have to do it because Lagarde has a real problem on her hands now, a real problem. That was a real shocking number. Don't forget, they were only expecting 9.98. So this reading is really scary, and it makes sense to come out on the 31st of October. Talking about October, moving on to what I want to talk about as well. October has been a bit of a comeback for equities. We had the Dow actually is up so far for this month. It's down at the moment, and we'll talk about that in a bit, but it's actually up 14% this month. And it's set for one of the best months since 1976 for the Dow. So that's pretty good. S&P is also up this month. It's up by 8%. And the NASDAQ is up by 4%. This is despite a really mixed earnings season. Because when you look at the earnings season, Microsoft disappointed, Facebook disappointed, Amazon disappointed, Google disappointed. Okay, just to name just a few. But even so, despite this sort of mixed bag of earnings reports, the S&P 500 and the NASDAQ and the Dow has done quite well. And it's not surprisingly because September, let's face it, September was a horrendous month for equities and for the market. So it's no surprise that they managed to bounce back a little bit in October. The real key to this, of course, is being that obviously that Fed pivot hope. And that Wall Street Journal report, which was released sometime early last week, indicating that the Fed may be ready to start slowing down on the aggressive nature with interest rates. And don't forget, like I say, obviously this means November now, it's all dependent on the Fed. And don't forget, that is happening on Wednesday. That's a big event. It's the FOMC press conference. Yes, they're going to raise by 75 basis points. We know that already, but it's what they say in the press conference could be key. And it's not just the market having hope. Somebody in particular, I talk about a lot, and he was voted one of the best portfolio managers in the market at the moment. This is a Mr. Michael Wilson. He's been a real big bear, and I've spoke about him a lot in this program, but he is actually beginning to change slightly his tune, because what he has said, he's beginning to think, he believes, okay, don't forget he's a bear, and he correctly predicted the bear market this year. Now, he actually believes the Fed pivot is on the horizon, which is pretty bullish talk for Mr. Wilson. It really is. He actually went on to say, and I'll quote him, this kind of price action, and he's talking about the equity market getting a bit of a boost this month, this kind of price action isn't unusual towards the end of the cycle, particularly as the Fed moves closer to its ending its tightening campaign, which is something, he goes on to say, something we think is approaching. So even Mr. Wilson, Michael Wilson, like I say, he's voted one of the top portfolio managers in the market at the moment. Even he is beginning to say or believe that the Fed pivot is on its way. He also went on to say he believed this bear market will likely end sometime in the first quarter. So again, a complete bear. I've spoken about him an awful lot at the time. He was on the money at the beginning of the year, got the market absolutely spot on. He predicted the bear market, and he was on the money for that. And now he's sort of changing his tune. So even he is changing his attitude. So like I say, we're changing his view on the Fed. So that's pretty encouraging. But anyway, let's have a quick look at the market, see where the market stands, because we are seeing a bit of dollar strength today. We saw dollar weakness most of last week because of this Fed pivot hope, but we are seeing a bit of dollar strength at the moment. First of all, starting off with the euro. We briefly flirted with parity last week. We're now back under parity again. Current trading is 0.9886. So yes, pure dollar strength again at the moment, despite this pivot hope. We can look at the sterling. Look at the cable. Okay, under the 115 handle again. Currently trading at 114, only just though. Currently trading at 114.88. Don't forget you got a boost, the change of prime minister, etc. Bank of England's coming up on Thursday for this as well, so that's going to be a big event. But again, we are seeing dollar strength again against the sterling. Dollar yen. Okay, dollar yen trying to edge higher. Don't forget, we saw Bank of Japan intervene twice last week. But now, as you can see, again, because of the change in monetary policy, don't forget, I talk about this a lot. BOJ, very, very loose monetary policy. The Fed, very, very tight. Very, very aggressive. So totally two different monetary policies and stands. Do I think the dollar would get even stronger against the euro? I think potentially. Again, I can't give advice, obviously, but it's a very good question. I am still bearish on the euro because, like I say, if you look at what's happening with the euro, inflation's at 10.7. Okay, they've got clear signs that their economy is beginning to slow down, and they have to raise interest rates. They've been slow off the mark. Okay, the Fed, they've been very aggressive. We all expect them to maybe get to interest rates to about 5% in the first quarter of next year. So they've been very aggressive. But the difference is the Fed can do a lot more than the EU can because their economy is still pretty robust. They've got a good labor market, a very good labor market. Of course, we'll find out more about the NFP, and they've been extremely aggressive and keeping to their target or their mission of bringing down inflation. So I think, like I say, less they do start doing a pivot and start to slow down, which we haven't seen any hints of them doing it. We might see a hint about it on Wednesday in the press conference. Then no, I can see the dollar continuing to gain strength against the majors. Plus the EU, we've got an energy crisis still there. I know they've got storage and we've had a warm autumn, but winter is coming. So I do think we can see further pressure of the euro, with the dollar getting strength against the euro, potentially in the medium to long term. But great question. Thank you. So the dollar yen, again, is back up to 148. We have a quick look on a daily. as well. Looking at the daily, as we can see, it bounced really off that 23.6% Fenerbahce ratio. Still trying to get back above that trend line now as well. So yeah, it is, like I say, still pretty bullish on the US dollar against the yen. Again, we'll have to see if the BOJ will intervene again. Let's have a quick look at gold as well. Gold, again, like I say, still under pressure. 1,637. This is down to the fact we've got bond yields are higher today as well as a strong dollar under that key area of $1,667, which is a potential key resistance. Finding a little bit of buying just above $1,606. So that's giving it a bit of support there. So yeah, there we go. Don't forget, like I said this morning, this is such a huge week this week. This week could really indicate how the rest of 2022 is going to go in the markets. Because if we have a look at it, okay, major events, like I say, US ISM manufacturing tomorrow, ADP employment on Wednesday, Fed interest rate decision on Wednesday, FOMC press conference, that's the key, on Wednesday, Bank of England interest rate decision on Thursday, US ISM services PMI, US non-farm payroll, of course, US unemployment rate. Like I say, this week is really, really, really massive. The market, as it currently stands, S&P trading in the red slightly, 0.78%. NASDAQ also in the red, negative 1.51%. And Dow 30 currently trading negative 0.49%. So they are a bit down today. But like I said, they have had a good month in October. And it's all about the Fed. All about the Fed at the moment, how November is going to go. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or let me know your opinion. What do you think? Do you think we're going to see more dollar strength against the euro or the sterling? What a week it's going to be. Yeah, it's huge, my friend. It's absolutely massive this week. It's a really, really big week, and I will be doing a watch along. Obviously, I've got a special new series of Trading School, which is on Wednesday at 6 p.m. UTC. So I would do a mix a little bit of a watch along with that. Plus, I do a watch along of the Bank of England, because that's really fascinating. That's going to interest me. I think they're going to do 75, but it'd be interesting to see if they actually pull the trigger and do 100, which some traders out there are hoping for. And of course, I'll do the watch along of the NFP, of course, as well. But yeah, you're absolutely right. It's going to be one big week this week. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to it next time I go live on air, which of course will be tomorrow morning at 8:30 UTC, and again tomorrow evening or tomorrow afternoon, we'll have the US session, and around about 2 p.m. UTC as well. So don't forget that. If there is no more questions, not a problem. As I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoy this little video and you like it, and it's funny, interesting, and you put up with me, subscribe if you like, hit the notification button. If you enjoyed this video, found it interesting and useful, and like I said, again, you've put up with me, over a top enthusiasm for the markets, then simply give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.